Hey, so today we're going to talk about the very unsexy topic of taxes, but I'm going to try to make it sexy. I know that sounds a little weird, but I know that taxes are a big part of running your own business and that it means a lot to save enough money to pay your taxes. And then as you get going as a freelance writer, sometimes that means switching to quarterly instead of doing an annual payment, which can be a lot of money upfront. Hey Getty, I just saw you pop in. So what we're going to talk about here is how to kind of work with your taxes in the beginning and then how to work with them in an accountant a little bit later on once you're a little more established and have more, basically more money that you owe to the government. So when you're handling taxes as a freelance writer, when you're starting out, basically what you want to do is, I like profit first. So profit first, as long as you make under 250K, that means that you're saving 15% of your income. So that means that when you get a paycheck, like whatever it is, whatever client pays your invoice, that means that you're saving 15% of that every single time. And you save it in a different account than your regular account. So if you have profit first, you have 5 accounts. That means you have income. That means you have OPEX, which means operating expenses. That means that you have own comp, which is your own compensation. It means you have profit. And it means you have your taxes account. So you would move your money from income, where you get all your checks deposited, to taxes, which is 15%. So I like doing that just to have the 15% always available. And then for some reason you made a ton of money and you owe more taxes than are in your 15% tax thing, you have profit to pull from to kind of make up the difference. But if you always have a mode where like every time you get a paycheck, you pull 15% out, put it in that tax account for later. That'll help you if you're going to do annual taxes when you first start out. So if your taxes are, $1,000 or $3,000 or $5,000, like a smaller amount when you're first getting started, annually, I would just leave it in there and then just pay your taxes annually when it pops up in, when you want to do it in March or April, whatever that is. So I would just do that annually, and then as your income increases, you're going to want to move to quarterly payments. So for me, having a giant tax account with a ton of money, like thousands of dollars in it, and only paying that annually is a really big pain in the butt, because it's like you have no idea what that number is going to be. You're not really sure what the difference is between taxing what you made last year and this year. Sometimes I know that it's really easy to just pull money from that account, right? So it's really easy to just see like $5,000 hanging out in a tax account. And you're like, you know what? Taxes aren't due for another 6 months. I'll just take a little dip into here and take a little piece out. And oh yeah, I need this software. And oh yeah, I really want this planner. And oh, I really want this other thing for my business. I want to upgrade my tools. It's really easy to dip into there. And if you instead switch to quarterly taxes allow you to plan every quarter to pay them some money. So that means that you're paying double in April. So you're paying any that you didn't, basically if you made more money and you owe something in taxes, you pay that in April, but you also have a voucher due in April. So you have a voucher due in April, you have a voucher due in June, you have a voucher due in September, and then you have a voucher due in the following January. So you're paying taxes basically January, April, June, and September of every year. So it helps make sure that you have money for taxes, and it's also getting paid ahead of time. There's one little thing that if you make a certain amount of money, that if you don't pay your taxes, they give you a fee, right? Like they penalize you for not paying your taxes ahead of time because you are making all this money and you should have done it quarterly. It's a whole thing. So I like quarterly taxes just because it's like, all right, tax money's gone. I don't have this giant account full of money. I'm not going to get I'm not going to get penalized for not paying my taxes, or not paying my taxes. I'm not going to get penalized for basically not paying early or paying a difference by being a contractor or freelance writer. And I just feel like it's a lot easier just to pay those vouchers. And then when you get to April and you have a difference, like even if you doubled your income, or even if you ended up making a ton more money, the difference is really small compared to what you would be paying. So instead of paying $5,000 or $10,000, you're paying a difference of like $1,000 or $2,000. And it's a lot easier to manage your money. And I feel like, especially when, we're running a business and we're trying to move all our money around and make sure that we have enough money to pay for things like in our business and then also pay ourselves, it's a lot easier just to have your taxes one and done. Like, you just do the voucher and you're done. So that kind of leads to the question of, well, where do we get the vouchers? Where do the vouchers come from? Well, the vouchers come from an accountant. So I started working with an accountant, I think right after I started my business, like right before I moved to Austin. So it's been a good 6 years or more that I've been working with this accountant. So he is authorized to do taxes in Texas, obviously, and he does my taxes every year. So I pay him a few $100s to do my taxes, and he does all the special forms and does all the special discounts and all the magic stuff that I have no idea how to do and that TurboTax doesn't always do. And then he sends me the coupons, basically the vouchers, where I just, cut them off. It's just a little piece of paper and it says my business name. It says basically how much I owe, my social security number, like all these things that are on there that tell the IRS, like, hey, this is Mandy Ellis and she's paying her taxes ahead of time. Please don't penalize her. So you send these vouchers, like I said, you send them in January, April, June, and September. And you get 4 of them from your accountant. They look like, they're just like little pieces of paper, and you send a check with them. So when you get them, it's really easy just to, basically, here's what I do. I cut all, like the vouchers come on this giant sheet of paper, and you just have this little ticket at the bottom. So I just cut the ticket off. I put it in an envelope. I have it all addressed and all stamped with a return to sender, all that stuff. And I write the check, and I leave it in there. And then when it's time to send it, I just date the check and then mail it. So when I'm doing my taxes every year with my vouchers, that's part of my tax process, is I prepare all the vouchers for the coming year, and the checks and the envelopes, they're all ready. The only thing I need to do is date it. So that makes it really easy for me to complete them instead of waffling and being like, oh, I would really like to have this money and I really don't want to do this right now. And this sounds like a lot of effort to send these vouchers. Like, it's really easy. All I have to do is put the date on there, like put the envelope together, like stick it together and mail it. That's really simple to do. And if you do this every year, that means that your accountant already knows, like, hey, they need their vouchers, and those vouchers are dependent on how much you made the previous year. So if you made $50K the previous year, the vouchers for, like, let's say you made $50K this year in 2020, the vouchers for 2020 that you send in 2021 would be based on that $50K. So in 2021, if you made $75K, you have already paid for at least $50K worth of taxes. The difference that you're going to pay is going to be coming in April when your taxes get all done, and they'll figure, your accountant will figure out how much you owe. So to me, that actually helps a ton. It's like you're already most of the way there. Like, even if you make more money, even if you were to double your income, you've at least paid some of your taxes, and it eliminates some money from that tax account that you have, where you don't have to, you don't have that temptation to dig into it, and you don't have that temptation to move it around or worry about any fees or penalties that you get by not paying your taxes on time or by waiting super long to pay your taxes. So I like that system just because it's super easy to do, and you get in kind of a rhythm. You get your taxes, you pay any difference that you owe, you set up your envelopes, you set it up in your calendar. Like, I just set it up to remind me every year. Like, I have it in my iCal so that every single year it's just like, repeat yearly. And I say, remind me 2 weeks before, remind me 1 week before. Like, I have all these reminders in there to remind me to set it up and put the date on the check and mail it. So all of these systems that you set up with your taxes make it really easy to complete them. And when you end up sending those vouchers, like, you date the check, you mail it, and it's gone. Don't have to worry about it anymore. So if you're worried about paying taxes and you're worried about how much you owe, I would just simply start with that 15% income tax account. So I definitely recommend reading Profit First. Profit First is like, change my business. It will help you manage your money so much better. And just having the profit account means that you have another buffer. So like, let's say your taxes aren't enough, you still have your profit account to help you, basically buffer anything that might come in and anything that you might owe. Or you know what, if you end up having extra money. Hey, Sevia just showed up. Hi, Sevia. I think that's how you say your name, Sevia. So just remind me if I'm saying that wrong. So that's how you kind of manage all of those little pieces. So when you're looking for, switching to an accountant, I think the first time you do it, like if you're just freelancing and you just have, $1,000-ish to pay on your taxes and you still have a full-time job, I would make sure to just get that done by adding it into your taxes. Like if you want to do TurboTax or something, that's fine. If you want to get an accountant to help you get any kind of discounts, like that's always a bonus. So if you feel comfortable doing that, then do that. But I think as you grow your freelance writing business, having an accountant to manage your tax stuff and then also manage your vouchers and help you figure out the differences and get any bonuses or, stay up to date on the tax code, which, I'm not staying up to date on the tax code all the time. It's really complicated. So having someone who is paying attention to all these different things that you can watch with your taxes. Like maybe there's a new break that came out for freelance writers, right? Maybe there's something that came out that'll help you save money, but you didn't know about it. And TurboTax isn't like paying attention to every little thing. And it's a little robot, right? Like it's made by people, but mostly it's a robot. And like a human being doing your taxes, they'll pay attention to all these things and say like, hey, there's this really weird thing that sometimes if you do this, you can do this. And you're like, oh, I'm already doing that. And they're like, oh, great. Like, here's another deduction or here's, a bonus or whatever. And it really helps to have someone who pays attention to all those things on your side. And like I said, like for me to do my taxes and get the vouchers, get all the bonuses and all the extra stuff and all the, like if I have a tax question or whatever, I can just email him. Like it's a couple $100 a year. So for me to get that done, it's a few $100s and it's totally worth it. Like even if I didn't have enough money in my tax account, I could pull $200 from my profit account because I've been saving profit all year. So to me, it's totally worth it to have all of those things because the penalty of not paying your taxes is, I think, a lot more than $200 or $300 or $100. So I think investing in an accountant who understands how to work with freelance businesses is really, really helpful. So I always think that's a good idea. And when you're trying to manage your money for taxes, it becomes a lot easier when you see how all the money flows. If you see that the money flows every quarter to pay your taxes, you have this management technique that's kind of like a full-time job, except you're doing all the pulling of the strings, right? It's not just automatically coming out of your paycheck and then you're like, okay, I get this much. Like it teaches you to manage your money a little bit more carefully because you know that January, April, June and September, you owe someone money, like a bunch of money. So you're like, okay, well, I have to be really careful because, I can't buy that software or upgrade that software until, May or February or October because I need to pay my taxes. And then after my taxes are paid, I'll look at my finances, see what's going on and see if I actually have money to do that. So I feel like a lot of times people end up kind of missing the money management steps when they move from full-time to freelance. They've kind of been in this auto pay situation, right? Your auto pay situation is that your employer is just taking the money out, right? Your employer is paying your taxes, they're doing all that stuff, and then hopefully you get a refund at tax time. But it's not really managing your taxes. It's just something that happens to you, right? It's something that happens to you by your employer and they're handling all this stuff. But when you actually manage your own business and you're thinking about, okay, every quarter there's this, that means this, that also means that, that also means that there's a lot of different pieces there that you're paying attention to. So if you have your tax account, like in January, you're like, cool, I'm starting out the year paying this amount in January. Okay, now I need to, by April do these things, or I need to by September or June do these things. It helps you manage how your money flows. So like, for example, if you're not making as much money in June and your voucher is $500 and you only have $200 in your tax account, you don't have to pay that voucher. just because you have the voucher doesn't mean you have to pay it. So there's a really important point there. The vouchers are for planning, but they're not 100% like, they're like the IRS says, like, oh, you got the voucher, you have to pay it. It's not like that. If you have $200 in June and you're like, man, I actually, my voucher says $500, you can send them a check for $200 and they will cash it. They will cash it. So the fact that you have less money there, you've at least paid something and you've given them the voucher and you're still kind of on track. So if you end up making less money, so let's say you're not actually on track to 2x, let's say, something happened or you haven't, had that much time to market, or your business is struggling a little bit and you're making less money than the voucher, don't send the full amount if it's not in your tax account, okay? So when you have that money in your tax account, let's say it's $200, you send your voucher, it says $200 on the check and $500 on the voucher. They will cash it. I've done it. And then let's say in September, you're like, sweet, I got this huge project. I have all this money coming in. And instead of having $500 in my account, I actually have $900 in my account. You can send them a check for $700 or what? No, you can send them a check for $800, right? So you paid $200 out of a $500, right? And then you have a $500 voucher due in September, but you actually skipped out on $300. You can send them a check for $800 to make up that difference, and they will catch it and they will do it. I've done it. So you can always mix and match kind of that, but as long as you're planning, right? You wouldn't have known that without the voucher. Without the voucher, you wouldn't know what you're paying, how to organize that, how to end up doing all of these things, right? So you wouldn't be able to plan your money saying like, oh, well, I sent $200 last time. I guess this time I'll try to send $300. Like, I don't know what's going on. Like, I'll just send them some money. No. You can always dice and splice this. As long as you're giving them something, you're not going to pay the fee. So as long as you are giving them some money in the quarters that they're asking for, or as long as you pay your vouchers by the end of the year, you're good to go. You're doing it within the tax calendar year. So they're going to get all their money. They're not going to penalize you. It's before the year turns. Like, everything's fine. So here's another scenario. If you end up getting your vouchers, like, you're going to get those vouchers in April, right? So the one that you pay in January would be after you've already done the vouchers for a year. So in April, you get your vouchers and you just forget about them. You're just like, go about your business, typing on your keyboard, working with your clients, getting on your calls, doing all your stuff. And it becomes December and you're like, oh crap, I totally forgot about all of my vouchers. Oh my gosh. You can send them all in December and they will cash those checks. Like, they will do it. They get a check and they cash it. I don't know who cashes it at the IRS. Like, you're sending them to the U.S. Treasury Department, right? So you're sending your checks there and they're just going to cash them. As long as those checks are cashed, as long as it's within the calendar year, as far as I have seen, obviously I'm not a tax professional because I'm a writer, but I've done these, like, I've done things. So, as long as you send them their money, they're happy to cash it. They're happy to give, put all your money in your tax account. So if you forget about it till December, as long as you hit in the year, you're fine. You're good to go. And even if you, like, let's say your tax account doesn't have enough for all the vouchers in December. Let's say you're short $1,000. Send all 4 vouchers and just spread out the money on the voucher checks, right? The voucher might say $500, but you give them $250 like we talked about before. But just send them what you've got. It's at least a prepayment. It's removing the fee situation or the penalty situation, and it's making sure you've at least paid your taxes. So these aren't like forcing you to pay all these months, but it's really helpful to plan. And like, ideally you want to pay April, June, September, January. That's ideal. But if you're caught short on money, even if you have $50, like, send in your tax account, send it. Just give them their money. Even it, like this year, for example, I've held on to my tax vouchers. I'm just going to be honest. I've held on to 2 of my tax vouchers because it's been really uncertain times and tax things have been changing. Like, they're like, oh, actually we're saying everybody's taxes aren't due in April. Now they're due in October or September. Like, they're just changing things so much that, holding on to them made sense to me. It made sense for my finances. It made sense for how to figure out how this money is going to work, how all these crazy events are going to play out, right? And I will be sending them in December, right? It's December, I'm going to be sending them. But it's also a matter of being smart with my money and smart with circumstances. Like with everybody going crazy and the whole summer was like, you can finally get unemployment as a freelance writer. Like that, what does that mean for taxes? And what does that mean for, like, there's so many different things. Sometimes when things are crazy, it makes sense to hold on to those vouchers. So I have held on to 2 of them and I will be sending them this month, but they're going to get out. That money will be going to taxes. I will make sure that they get all the money they need by the end of the year. And I don't have to worry about whether I'm going to get penalized or they're going to like miss a voucher or whatever. Like they're going to get their money. So when you're doing your tax stuff, I always kind of recommend to other writers that like working with an accountant makes it a lot easier to manage your stuff. Like for a few $100s a year. So like if you save $20 a month, that will pay more than pay for your taxes. Like if you work with an accountant, not H&R Block where they charge you like $500 to sit in a green chair and then like tell you stuff you already know. Like not that, like an actual tax accountant. So it's a few $100s, and they actually help you plan all this stuff. They do all the magic. They give you all the bonuses, all the discounts, and then you've got these vouchers to manage your money over time. And like I said, I'm just going to say this, just because you have the voucher does not mean you have to pay it in the month that it is due. As long as you pay them by the end of the year, you're usually in pretty good shape. I don't think there's ever been a time where they've been paid late where like there's been penalties or issues. As long as you pay them within the calendar year, you're good to go. Ideally, you want to space them out so you're not dipping into your tax account and going crazy with extra products and money and stuff. But your tax stuff gets a little easier when you have an accountant, when you have vouchers, and when you have like the profit first method that gives you that 15% tax account for your money. So that's kind of a little bit of an overview of taxes, and it should kind of make it feel a little simpler. I know sometimes freelance writers get real stuck about taxes because it's like this big gray cloud in the sky where we're like, well, how much do we owe? And it depends on how much money. Like 15% covers you for a long time. Like if you read Profit First, he tells you to save 15% for up to $250K a year. Okay, so as long as you make $0 to $250K, 15% should probably be pretty good. But if you get caught, that's why we have our profit account, which is 5%. So as you move up, your profit number changes. So before 250K, it's 5%, and then it changes to 10%. It changes along the way. So if you get caught, you still have your profit account to pull from. You still have that backup option. So all of these things together, I think, really make freelance writer taxes more easy to maintain, easy to understand, and easy to have like an organic process for you to complete throughout the year. So I hope that was helpful. I'm going to go and see if there's any questions in there. And if you guys felt like this was helpful, if you guys felt like you got some value out of this, share the video, like the video, subscribe to the channel. I'm going to give you guys a little update while I look for questions. So there they are. Oh, it didn't go. Oh, there it goes. Hi, Minnie. Oh, do you now know the word pup date? You do know the word pup date. Good girl. I can't believe you know the word pup date. You're so smart. How'd you get to be so smart? Can you catch it? Oh, there. Buddy, it hits you right in the head. Here you go. Good job, buddy. You tried. You tried. That's what happens when you turn 14. Right, Bear? You tell them. You say, when you're 14, you don't do the work. Everyone does the work for you. Good job, buddy. There you go. Good job. All right. Let's see if there's any questions. I'm going to say hi to people. Hi, Getty. Hi, CVS. Sevilla. Remind me how to say that. And Camille's in here. Ooh, Camille. I'm going to share you because you said super helpful tips. So, Camille, tell me what you felt like was the most helpful for you so far in here. Let's see. Ooh. She says, so Sevilla says, this is so helpful. I feel like I've been flying by the seat of my pants with taxes. With regard to tax. Yeah, that's often what happens, right? We kind of fly by the seat of our pants, just kind of hope it figures itself out, hope we have enough money. Like, oh, she has a good question here. So I think a lot of times we do that. We fly by the seat of our pants. But as long as you kind of get a process in place, like figure out how to do it, like profit first and accountant and having your account, like it makes it so much easier. So CVS says, is that regardless of whether or not you're an LLC? So you're going to be, I did this before I was an LLC. So whatever, like all of the things, the vouchers and the profit first model and working with an accountant, I did all of that before I formed an LLC. So basically it would, instead of being filed under my, hold on, what you doing? You being sneaky? Good job, Charlotte. You did it. So regardless of whether or not you're an LLC, you can do this. So that means that you can call an accountant, get it all set up. It's going to file under your social security number instead of your EIN. So the difference that you get with your LLC is you're going to be filing taxes basically under your EIN and then also kind of like your social security number. So whatever you feel more comfortable with, like I just like having the LLC to have the EIN. So whatever you feel more comfortable with, you can create an LLC if you want, but all the tax stuff you can do regardless of whether or not you're an LLC. So Tommy says, I'm going to load that up. Do you save money to pay your accountant? Yes. So I do this normally in my profit account, actually. So we do want to, oh, that's attractive. Good job, you coughed. So, so I do this in my profit account. So I make sure that my 5% of my income goes to my profit account. And then that money gets saved for paying my accountant, you know, the $200 or $300. I can't remember how much it is now every year. So instead of pulling it from my tax account, which is where my, you know, like let's say I made more money this year, which I did. So I want to have my tax account make sure that it has enough money to pay the difference in April. So if I save extra money in there for my accountant, sometimes it gets garbled. Like to me, it gets a little garbled. But if I have it in my profit account, I know that that's money to pay for business expenses. That profit account is to pay out, like if I want a software upgrade or if I want to buy not buy a platform, but join a platform or, you know, try to do a bunch of things where I'm trying to upgrade my business. The profit account helps you kind of pay for business expenses, right? There's also the OPEX account. So your OPEX account is your actual operating expenses, but this is more on a monthly basis. If you feel more comfortable saving your money in an OPEX account, and all of these accounts are explained in Profit First. So I know this sounds a little confusing at first, but if you read Profit First by Mike Malkowitz, it's on Amazon, it'll make a lot of sense. But if you want to save the $200 in your OPEX account instead, you can do that. But I always like to put it in either profit, you can put it in OPEX, but I like profit just because I already know in my mind that that's for taxes. So let's see. Yes, 15%. So what I see here is, so it's 15%. That's up to $250K based on the Profit First model. And then, like I said, like let's say you make $200K and you end up needing more money to pay taxes, or $225K, whatever the tax thing is. So that's when you start pulling from that 5% profit account. So you have your profit account that's kind of the buffer just in case for taxes. You need a little extra money for that. So yeah, it's 15%. I know a lot of, I used to save 20%. So for me, switching to the Profit First model actually made me get more money back. So every year I would save 20%. And I think for one time I saved 25% by accident. But I saved 20%. But then once I read Profit First, I understood it a little more. So I did 15. And then that extra 5% for profit is 20% anyways. So for me, I ended up getting money back because now I'm only doing 15% untouchable for taxes and 5% for profit that allows me to kind of move it around. Ooh, yes, we got some love for Profit First. Profit First is the best. I'm glad Casey agrees. Profit First is the best book. Sevilla. Sevilla. Yeah, okay, there we go. Sorry, I'm sometimes really bad with names. Sevilla. Okay, I'm going to remember this. Like the number 7. Oh, that's smart. Okay, top tips from Camille. Let's put this in here. So it says the percentage to put aside and the process of payment. Yay! Okay, good. So that's what I was hoping for. I was hoping that the most important pieces here would be how much and how often. Like, how do we actually set up this system. Casey has another good question here. So why wouldn't I pay it out of my OpEx account? So my OpEx account is basically paying my monthly subscriptions. It's paying for annual, like my website. It's paying for Dubsado, which is how I run my business. It's paying for, like if I want to put my courses on Teachable, or if I want to pay my monthly Flowdesk subscription. Like your OpEx account is to pay your operating expenses on a month-to-month basis. So for me, your tax stuff would always be in your taxes account. And then if you wanted to, like I mentioned, you can put your money to pay your accountant in your OpEx account. But I always like to pull from profit. So your OpEx account is just your operating expenses, and it kind of helps you more manage how much you pay per month on the things that run your business. So your OpEx account is like, how many subscriptions are you paying? What are you paying out to actually run your business? What are you doing in terms of like monthly things that need money, or annual, like my website renews like in February or whatever, I don't remember, but your website renews, like that would be part of your OpEx expenses. So we'd want to leave that one alone. Okay. Yeah, so I think it depends on personal preference. So Tommy says he could go with either one, but he feels like he might put it in OpEx. So I think it matters how you actually want to manage it. So if you feel more comfortable in OpEx and just saving money there, then that's fine. But usually what happens is the profit first model is you're pulling OpEx and you're pulling your own comp every two weeks. So what you're supposed to do is pull 100% out of OpEx and 100% out of own comp and pay yourself with it every 2 weeks. So if you're doing that and always pulling money out of OpEx, I feel like that becomes more confusing. With your profit account, you're only supposed to take 50% of that account every quarter, which I don't always do. And with your tax account, you're only pulling from it to pay your quarterly vouchers. So for me, when I see money coming out of an account a lot, it's hard for me to say like, oh, there needs to be a $200 minimum in here. And it's just like confusing. So since you're pulling from OpEx all the time, I think it would be really easy to just dip into that extra $200. You're like, I need it this month, I'll just do it. No, no. So for money that you're like the profit account, you're only pulling every quarter and you're only pulling 50%. So that means that even if you pull 50% and you pull 50% all year, it's very likely you'll have $200 extra in your profit account by the time you pay your taxes. Like the way the system works, that makes more sense. But it'd be a lot harder to keep pulling money from OpEx and not have the account be at zero or like dip into it or mess up the math. Or I feel like it's a lot more sticky to put it in that account since the money moves there all the time. So yeah, I always like using an accountant. So I see there's like a few comments in here. So yeah, I always like using an accountant because it's just a lot easier to have someone who understands the code, understands any changes, understands what works for freelance business owners. They've kind of got it all figured out in terms of helping you get the most out of your tax money and then also helping you map out how to get your money right. So that's all the things I like. So any last questions? We're a little over, but we started a little late today. I have a friend down here. She moved. Maybe I can get her to move back. Oh, there she goes. We'll do one more update just because it's Friday. All right. Can you move over here, though? Can you move over here? Can you turn around? Good job. Treat for you. Good job, Bear. You're beautiful and dignified at 14. Charlotte, I like your frosted jowls. There you go. All right. Yeah, I also like this comment. Okay, one more thing before we hop off. I like this comment by Tommy really like a lot. So, yeah, it's always really nice to have an actual human that you can talk to instead of a robot like TurboTax. So, like, I've had trouble with TurboTax or other kind of programs in the past. And it's a lot easier to just talk to a human like, why am I getting charged this? Or why is it this way? Or how do I do this? Or what should I forgot the place to send my voucher. Like, if you do TurboTax or you do a robot-y thing, you're not going to get vouchers. They're going to be like, good job, you paid your taxes, see you next year. Like, that's it. they're not giving you support. They're not answering questions. Like, I guess they have like real people now. I haven't used TurboTax for quite some time. I know they have like real people you can talk to now, but it's not the same as someone knowing your business, knowing your finances, seeing the difference that you're making and saying like, hey, you cracked this thing, you might want to watch out for this. Like next year, like it looks like you're growing, maybe you might be moving to this tax category, watch out for this, blah, blah, blah. It's way different with someone who's actually invested in your business succeeding and helping you with all the money management piece that goes with taxes. So, all right. Any more questions? Okay, I think we're good. So if you guys found this helpful, make sure you hit the like button, subscribe, and share this video. I know taxes can be a real kind of like dark cloud thing that follows us around that we don't understand. So I'm hoping that this was breaking it down a little bit for you guys. And if you need a tax accountant, Charlotte says that she might be going into taxes, so you might be able to hire her. But, she's just waiting for the Cheetos. She's just sitting there like, there's no Cheetos, but I like the licks. Thank you. All right. I hope this was helpful. See you guys next week. And thanks appreciate all the good questions. Bye.